What's going on, you guys? I hope you're excited for another educational video on YouTube, because I certainly am. Today, I'm going to talk about adding to positions the right way, the wrong way, why you shouldn't add to losers. Technically, there is kind of a way you can... Alright, but most times, you're not going to want to add to a loser. It's going to be more beneficial to you and less risk to add to a winner. But shout out to Prime XBT for sponsoring this awesome leverage trading series. I've got tons of videos in it, you guys. So if you haven't seen them all, go check them out, binge watch them, bookmark your favorites, and watch them again because it's full of alpha for you. All right, you guys, I'm going to start out this video just by getting into the meat and bones of this thing. All right, we're going to talk about why you really shouldn't add to losers. Now, there are strategies to where you can add to losers, and we can talk about that a little bit. But most times, you're not going to want to add to a losing position. And why I say that is because let's just say you bought here on an asset that's falling, okay? And then it keeps dropping, and you buy again. And it still keeps dropping, and you're like, well, it can't drop anymore, right? It's going to bounce at some point. So you buy again. And now this was a normal size buy, right, up here. So you went at your normal position size, and now you're down way more than you should be on that position. So you added, and you added again, and now you're underwater on even extra positions, so your risk tolerance here is very high. You're way above what you should actually be risking on this trade, and if you don't get any bounce, you're really going to lose your hat, and you're not going to know what to do because you're not going to want to realize that loss, right? Because if you don't sell, it's not a loss, but again, it could just do this and die completely. So if you do find yourself in that position, sometimes it's best just to find any little bounce and get the hell out and save some unrealized losses, or save some profit or whatever, save some of your capital, because it can do a little bounce here, you get excited, and then it just dies. All right, but basically you don't know what to do here. I wouldn't be able to tell you what to do. I don't know the answer. You could sell here before it nukes. You could sell here and then it pumps, and you're like, shit, it's impossible to say. And at that point, you're stranded on an island, and you hope that a plane drives by and sees your SOS. Otherwise, you're screwed, right? So that's basically where you're at. So why I should add to a winning position now, okay? So let's just say this asset drops, and I get in here, and it drops a little bit more, and that's fine because my stop loss is down here, and it bounces back up, okay? And now let's just say it chops around for a while, and then finally I get like a double bottom or some sort of confirmation here to say, okay, this should, like, we'll get a trend line here, okay? Let's just say we've got a trend line here and some weird stuff, and let's just say it breaks out, and it retests, and I go, okay, I've got confirmation now that this should continue. This should be a trend continuation now. So I have confirmation, all right? If I get in on a retest, that gives me a good risk to reward for a separate trade entry. Not only that, I'm already in profit from this entry, right? I'm up a few percent or whatever. So if I do buy more here, let's say my average entry goes from here to here now, okay? All right, so now my average entry is up here, which is still fine. Price is still above my entry. I'm still in profit overall, and even if this drops, I'm still in profit, and I could always technically cut at break even if I needed to. Okay, so right now I'm in a winning position. I increase my position size because I'm feeling comfortable. This is a good position. I'm not buying the top of a pop here, okay, up here, and increasing my average position way up here, right? I'm buying at basically a continuation point where I'm saying, all right, this broke out now. This is for my trading style, a confirmation of continuation of trend. So I should expect this to keep going. And if it doesn't, I've got a clear invalidation here, and you're almost running it as a separate trade, but it becomes one, and it increases your size. And if your trade continues to go in your favor, you make more profit rather than just sitting here, in a smaller position or whatever. And what also happens is you can move up your stop loss to keep your risk tolerance the same. And even if you say you put your stop loss here below entry, so you added here, your average entry is now here, and your stop loss is here, which is still within risk management parameters, okay? Because now your old stop loss was here, you've moved it all the way up, and this is your invalidation point now. And we're good. So I can either take a calculated loss that is still within my risk management. I could close at break even now, All right. I could close in a little bit of profit if it goes against me, if I feel like it's just breaking down. All right. And as this goes up, maybe this starts to break out and I go, okay, now I've got a nice base here and I think this is going to form another continuation pattern. Now I can reduce my risk even further if I feel necessary, or maybe I can take some profit here off the table. All right. So there's so many ways you could do this, but honestly, this is like, that's it, you guys. That's like literally it. That is the basic breakdown of this, of why you should add to winners and not losers. It really couldn't be more simple than that. So here's a perfect example of what I mean. So let's take a look at Bitcoin here, and let's just say, you know, you're expecting this to be a support here. And so you buy at this support and it nukes through. Now what do you do, right? You didn't have a stop loss. You just bought. You went full size. Well, you're like, well, may as well buy again, right? Oh, now it's nuking again, and you're like, well, this is going to be my last buy. Otherwise, I'm going to have to get out. And then it nukes again, and what happens here is people are like, okay, this is way too big of a loss. I'm an idiot. I shouldn't have just kept buying. I should have sold this here. Like, I should have had a stop loss down here. All right? Manage my risk appropriately. And then maybe I could have bought here again. Maybe I would have gotten stopped out again, right? Then maybe I could have bought here again, you know, or whatever. But the point here is you're taking 3 small calculated losses rather than one big loss where you've added more size than you want to, and now you're big underwater, right? So another example here is even if you go small, all right, let's just say you go small here, you do like 10% of your position. Well, now you want to add more, and that's fine, okay? So now I add like maybe 50%, and I add the other 50% or 40%. And so my average entry is like still way up here. And now I'm just back to break even on this bounce. So now I have to make a decision. Do I want to close at a loss or, you know, at break even? Do I hope this flips and I can get back into profit? Okay. So it's really hard when you're in a losing position to manage that position going forward. Rather than just cutting this here and maybe not even taking one of these trades again, okay? And then you wait and you go, all right, this, like, I bought here, it didn't work out. This is just nuking so far. Maybe I'm just going to give it a shot here, right? I've got a good risk to reward. I can put my stop loss below. And now you're in profit and you can be like, all right, well, that was a good trade. I went full size here. Didn't work out. I got stopped out at a calculated loss. Took a trade here. Went full size. I didn't get stopped out, and it went to profit, and now I'm actually made up my loss from earlier, all right? Or even, like, let's say you bought on these, like, lower wicks here or something, all right, on the second one, and you got a quick bounce, and you're like, I'm not feeling this bounce, I'm going to get out. I've got no confirmation to add here, so I'm just going to get out, and I've got my small profit, and maybe you make back your loss there, okay? So cutting your losses is crucial to trading, especially for my style, but you're going to find yourself struggling to manage losing positions, especially if you keep adding to them. All right, so let's take a look at FCX here. This is one that you can see here. We have a trendline breakdown. All right, this looks distributive. We've got our rounded top, whatever. So this looks pretty distributive. We've got a breakdown on high volume, and now we're looking at the retest. So basically what I can do here is if this weekly is still green, all right, I could start slowly adding to this, not knowing exactly where it's going to reject. So let's just say that midweek on this week, I'm going to just throw in a random short here, like small size, right? And what happens is if I went, let's say if it price is here at $41, and let's say if I went full size, I would only want like a 3% stop loss, okay? And we're going to say my target's down here at this SMA. I would have a 3% risk is my max risk on a full size position, let's say for this example. Okay. Now, if I just go full size there, I'm going to get stopped out and it's going to go back down. And I don't have any confirmation for short yet, yada, yada. So that's not the correct way to really go about this. So instead, I can say, all right, I don't know where my average entry is going to be. I'm just going to slowly start laddering and I'm going to do like a 7% stop loss. Okay. I don't want to see it go above this wick, we'll say. Okay. Actually, I really don't want to see it go above this here. So that's actually right where my stop loss is at. Okay. Right here. So we've got a lot of confluence here for resistance. So let's just say I don't want it to go above this resistance. If it goes above there, you know, whatever, my idea would be invalidated. So I'm not going to do a full size position on the way up though. I'm not going to go 25%, 25%, 25%, 25%. I'm going to go very small. So I'm going to go like I'm going to maybe just do 5% to start. So maybe I do 5% right here. Okay. When this candle's green. And then, you know, it goes up and it bounces around a little bit. And okay, I'm going to go another 5%. So now I'm 10% of my position size. If I take that loss, it's literally just a 0.7% loss, right, over the total position. So then I could be like, okay, it's going up again. I don't feel comfortable adding here because I don't know how high it's going to go up. And then it starts to reject a little bit. And I can go, all right, maybe I'll add another 5% here. Okay. And it's kind of just hanging around, and I'm like, you know, maybe low time frames are rejecting a little bit, so I'm going to add a little bit more here, another 5%. Okay, so now I'm 20% in. Price is, you know, my average entry, it's maybe about at average entry. And my average entry is moving up every time I'm taking these. And now my stop loss is 5%, but again, it's only on 20% of my position. So it's still a pretty small stop loss, okay? Overall, like this is a very well calculated risk. All right, and then now what happens is, okay, it starts to drop and it rejects, and now the weekly closes bearish. Okay, now the weekly is about to close bearish, and I can go, okay, now I want to add back more of my position. And technically at this point, because my average entry was up here, technically at this point, I'm actually in a winning position, right? So now I'm adding to a winner, and I can add more size. Now maybe I do 25% and 25, and if I get a retest here, I'll add the other 40%. Which I didn't get that maybe or whatever. But now you can see I'm in control on this position. I'm underwater here with room to add. And maybe my invalidation is here, and let's say price would have wicked up to my invalidation, and I have a very, very clear invalidation level. And if this invalidation is right here and price goes to there, I could say, all right, I can add 50% here because my stop loss from that 50% is literally like 0.2%. Okay, so that gives me a very good invalidation, very good tight risk management there. So that would be kind of the proper way to add to a loser. But again, overall, I would end up still adding to the winner when my average entry starts up here, and then I'm getting in more on confirmation anyway, okay? Thanks again, everyone, for watching my video. Make sure to subscribe to my channel. I really appreciate all of your support, and I will catch you next time. Peace.